Hi everybody, and welcome to this presentation on the economics of wetliculture. And as you heard this morning, wetliculture is kind of an innovative concept that restores wetlands and puts them in rotation to return them back to agricultural use with the intention of helping the agricultural sector recover and store and make available the nutrients that historically have run off and caused some of the environmental issues around um, harmful algae blooms and nutrient loading and things of that nature. So the purpose of this discussion is really to look at the business model, the economics of wetliculture, and the question of can we find an economic model that incentivizes investors and farmers and other stakeholders to adopt, to embrace this concept of wetliculture, and that's where we're going with this next presentation. My name is Sam Miller, and I'm from the University of Notre Dame. I teach in the Mendoza College of Business at Notre Dame, and worked in collaboration on this project with some really terrific ecological talent. Bill Mitch, who is one of the leading experts in wetland ecology from Florida Gulf Coast University, and a couple of his associates, Babik Bakshi from Ohio State and Li Zhang from Florida Gulf Coast. And collectively, I think we pushed into some new territory to try to understand how we might design an innovative business model that might put this concept in place. So that's what we want to talk about today, and let's go ahead and get started. The basics of this talk today are around economics, right? And so we'll begin with some just baseline assessments. What's the economic model for traditional agriculture, right? In this case, corn farming in the state of Ohio. How much does will a farmer have to put at economic risk to take productive land away from farming and put it into this wetland program? What are the economics of wetland restoration? How much does it cost to restore and maintain the wetlands that we're going to be talking about? And then, is there a way to quantify the payment for ecosystem services model, right? The carbon and nutrient sequestration and the habitat credits and other sorts of economic incentives around ecosystem services. So we'll look at that with the intent to come up with a model, an investment model that provides a return that is not just an ecological return, but also an economic return on this investment in wetliculture. So that's where we're going to go, and I just want to make clear that the intention of this presentation is really it's not meant to be a definitive conclusion that we have found the answer, but rather it's meant to be a starting point as we explore for multiple answers that might lead to an opportunity here to take this thing and put it to work to help solve some of our ecological challenges right now. So it's a template that's meant to be exploratory. We make some assumptions that can be challenged. I get that, but we have to start somewhere, and that's where we want to go. And just put this thing out there to open the dialogue in terms of can there be a business model alongside of the science that goes with this. So let's begin by looking at the economics of farming, right? So farmers, they farm their land to provide for their families, and let's understand exactly what those economics look like, right? So standing on the shoulders of the Ohio State University's database, we found some pretty good numbers in regard to the economics of farming, right? And so the estimate of yield looks at like about 200 bushels per acre for corn at an expected market price of about $4 per bushel. And those are the numbers that come out of all the economic assessments from the Ohio State University. And the expectation is that a a good farmer that works hard and has some good luck stands to earn about $800 in revenue per acre. Of course, that's revenue. There's costs that go into that, direct costs, and everything from seed to nutrients to insurance to machinery, all the way on down the line. You can see the costs here, and they're estimated to be about $450 or so per acre, which puts our net return per acre at about $346 every year for every acre of corn farmed. And so we use that as our baseline assumption, but we also recognize that farmers are probably not likely to put their most productive acres into a program like Wetlaculture. And so we applied a factor of 75% and basically suggest that the farmers will put in play their less productive acres. And so that comes down to about $260 per acre. And that's going to be kind of our baseline estimate, that below that number, a farmer's probably not going to be interested. At or above that number, maybe we get some interest from them. And so keep that number in mind, $260 per acre. And there's another number I want you to keep in mind as well, and that's this the cost of nutrients, right? About $132 every year per acre to apply nutrients to their crops. And so this is something that the Wetlaculture program will allow the farmer to realize some savings by not having to apply those fertilizers in future years. So let's keep that number in mind as well, $132 per acre. So those are the economics of farming. Let's look at the economics of wetland restoration, right? And so this infographic here is a model developed by Bill Mitch and other associates, and it basically estimates the cost of wetland restoration based on the size of that wetland. And so using that model and some other kind of back of the envelope bottoms up sorts of assessments, we looked at a 10-acre, a 100-acre, and a 500-acre site. And a 10-acre site estimated at about $250,000 for the site. To restore a 100-acre site, that's about triple the cost, right? So about $750,000 to do a 100-acre site. And then to do a 500-acre site, so 5 times the acreage, is again about triple or so the cost of a 100-acre site. And those numbers map reasonably well with the expectation from the Mitch model, with an obvious observation here that a larger site is much more economical per acre. But another consideration comes into play, and this is an assumption we're making, right, that the wetland restoration program, which offers to reimburse 75% of the cost of the restoration, can be applied, that the farmer can take advantage of that. And if we deduct that 75%, the net out-of-pocket restoration costs work out to be, as follows. And as a 500-acre site, which is where we're going to focus our assessment here, it's about $500,000, which works out to be about $1,000 per acre. And so we'll use that as a starting point, that the total cost is about $4,000 per acre, and the net out-of-pocket after the WRP reimbursement comes through is about $1,000 per acre. So let's keep building on this, right? So let's talk about the economics around payment for ecosystem services. So these are the various markets: water quality markets, carbon markets, conservation credits, other sorts of things that come into play. And so let's try to get our mind around what those numbers might look like from an economic modeling point of view. So the first thing we have to do is look at sequestration rates, right? And estimates show that nitrogen is sequestered at about 40 grams per square meter per year. Converting that into pounds per acre per year comes out to about 359 pounds per acre per year. Phosphorus is in the range of 2 grams per meter squared per year, which works out to be about 17.8 pounds per acre per year. And then with carbon, we need to factor in this idea of additionality, right? And so the the carbon sequestration in terms of pounds per acre per year are about 1,695 pounds per acre per year. But we also know that corn farming also sequesters some carbon, right? It gets absorbed into the soil and the biomass and other sorts of things. And it's so at a rate of about 304 pounds per acre per year, the additional carbon is about 1,391 pounds per acre per year. So we use those as a sequestration rate in our equation. Next, we have to estimate the economic value. And so here it's the economic data is not great. These markets are not very well established, and pilot programs come and go and that sort of thing. So we had to do some estimation, and we used two estimates here. One was the market values in various sorts of trading programs, and the other was the cost for tertiary treatment in wastewater treatment plants, right? So the cost of removing nitrogen and phosphorus if it was being done at the point of wastewater treatment. And the ranges we came up with, again, these are estimated ranges, but anywhere for nitrogen between 50 cents and $5, give or take, per pound. And so for this one, we used an estimate at the lower end, right? About $1.20 per pound is the estimate we used. Phosphorus, similar sort of math. The range that we were able to find between market values and tertiary treatment costs between 33 cents and about $12 range sort of thing. And for this one, we used a higher range because there's a couple of markets in place that are in that ballpark around $10. So that's the estimate we used. And then carbon markets, there's a little bit of evidence out there from Europe and other sorts of trading programs between $20 and $40 per ton, give or take, which we used an estimate at the higher end, about $35 per ton, because it seems somewhat likely that these markets might gain traction in the near term. Convert that to price per pound, and it works out to about 2 cents per pound. And so using these estimates, we can see that the annual per acre payment for ecosystem services rate would be a little over $400 for nitrogen, 178 or so for phosphorus, and just under 25 for carbon, which brings us to a factor of $633 per acre as an estimate. Now, a couple of considerations to take into play here. Number one is that we are assuming stacking will be permitted, right? That we can sell the same acreage for carbon credits and nutrient credits and wetland credits and conservation credits, and right now that is kind of a controversial topic, as many of you probably are aware. We are assuming for this economic assessment that we're going to need to rely on the ability to stack. So stacking is assumed. Secondly, the idea of a trading ratio, right? That there's risk involved, and that these whether it's wetland banking or other sorts of things, there's a trading ratio that comes into play, and we're assuming a trading ratio of 2 to 1, right? That that cuts our value in half, because we're going to need to provide twice as much acreage to provide 1 acre of benefit. But we hope that because these programs will be tightly monitored with science and investors looking over our shoulders, that we might be able to boost that up to a range of 1.5 to 1. Okay, so our trading ratio baseline 2.1, with a hope that we can get it to 1.5 to 1. We also are assuming that we can stack conservation reserve program credits, which are in the vicinity of $70 per acre per year, and if we include those in our model, we end up with an estimate of around $380 per acre per year that we might be able to capture at our baseline value of a 2 to 1 trading ratio, and that every acre might be able to yield $380 in payment for ecosystem services credit, economic value.